Hello guys, today I wanted to go over ticker symbol LGVN. LGVN, as you remember in last video, I was telling you guys were looking for a day trading strategy. This one was a very simple one. It's a pretty clear, straight down to earth. It involves shorting everything that the prior day, the previous day, the change previous, as you can see here on the scanner. That if it goes anything over 20%, there is a good chance that the following day it's going to drop. To no surprise, when it tends to make a big spike towards the upside, the next day there's a good chance that it's going to fall. Now, as I said, you have to be careful for multi-day runners, right? You can always account for those, but on the bright side, you know that the majority of the times, it's going to fail. You will have to account for multi-day runners, which are a probability, but the majority of the times they're just gonna fail. If it goes up one day, the next day it's gonna fall. So this is what happened for LGVN yesterday. If you see the scanner, it went up 48% yesterday. So there was a good chance that it was gonna drop today. Sure enough. Actually, yesterday we also had, I think it was WHLR, that had pretty much the same exact case for short sellers. It also ended up dropping for the day. So this one, it went up over 48% yesterday. Let me look at the 20 days 30. Okay, it went up from here all the way over here. Yeah, 46% it went up. Around there, it spiked up. It spiked of 115%. It dropped 31% from the lows. Then the next day, it gapped up again. Now, because the prior day it had a spike up, a pretty high, over 100% spike up, there was a good chance that it was gonna drop the very next day. The day is not over yet, but I mean, it's only like it's only one more hour left in the market. I doubt it's gonna keep going up. So what I would do is then when the market opens, I always suggest shorting into the nearest half dollar. In this case, it opened up right at 346. You could have shorted at 350. If you could also short it at 4, it would have been even better shorting right here, right at $4. You would have a beautiful drop towards the downside. So if you're a short seller, I've shown statistically how it looks that if you short everything, this is the metric right here. This is the data point. Anything that all of these is that the previous day it went up by that much. Okay, I sorted them from the highs on the top, and then towards the bottom you got the ones that dropped. So now we're just focusing on the ones that went up the most. And this is the closing percentage. Pretty much is just, from the opening price all the way to the closing price, like this. In this case, it would have been +9. In this case, so far, if it open here and it drops, that's about, so far is a -12% so far. Okay, so that's how I get this percentage right here. So if we highlight these all the way, let's say we can highlight all the way to at least 20 right here, this right here, 20, we get an average of 515% return. Okay, but remember, there is a downside to this, is that you will have some that spike. So let's just clean this up. Let me get rid of anything below this. You have to account for the ones that spike up, because as a short seller, those can like wreck your account. So as a short seller, you always want to have a stop loss. You never want to stay completely exposed. So in this case, I highlighted the ones that spiked over 100%. I highlighted them green. Anything that spiked over 50%, I highlighted blue. Okay, so I really like this day trading strategy. If you're looking for the best day trading strategy, or at least one of the best, it's not the best, but I think is one of the best and easiest way to learn to trade in the stock market. I think this is a very good one. Okay, so now for these losses, remember I would like to cap them at 50. Okay, you have to cap them somewhere. There's no way you can be completely exposed and take a massive 100% loss, a position loss. Usually I keep it to 50% loss. Okay, so say that each one of these is a 50% loss. So that's 50 times, that's 11. So that's equals 50 times 11. That's going to be the percentage of your losses. You're going to take 550 in losses. And then in the ones that are not losses, the ones that you waited all the way to market close, you get 837% in profit minus 837. So if you're short, if that's your strategy, your day trading strategy, going short, you're gonna make 837. You're gonna lose 550. Okay, so now if you add these, you're going to have a difference of 287. And I've always spoke about how I always like having no more than 3, maybe just focus on 1 or 2 strategies that you like and continue doing those for several months. Because what's gonna throw you off is that you keep jumping from one strategy to the next strategy. So I really like this one. If you stick to this one and then maybe you can do another one, like 2 strategies, you can have and this is just for 5 months. This is the data from January to I think it's May or June of this year, 2024. So halfway by the year, we're almost at 300. Maybe the next the following months you have another 300. That's 600% just in one pattern. And I always suggest doing 1 or 2, no more than 3 patterns. You can do a lot, but it does require a lot of focus and it might throw you off. They might interfere also. So I think this is great. If you have this one giving you 600% a year, and then you have another one that's giving you another 600 or 500%, you can easily be making almost close to 1,000% per year. So this one is great. LGVN for June 14, 2024. Okay, guys. Let me know if you guys have any questions, comments, concerns. Leave them on the comment section below. Thank you.